بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله. Welcome again to our third lecture of financial statements analysis. In today's lecture, we'll have discussion on factors of business survival and the limitations of financial statements analysis. But before these two discussions, we'll have a short and a quick review of our previous lecture, inshallah. So let's begin. Last time we had discussion on the users of financial statement analysis, and we said that there are two types of users: internal users and external users, right? Internal users, they mostly relate to the organization, and there are mostly two types of people: managers, directors, and executives, right? And the external users, they are external stakeholders, and they could be shareholders, they could be creditors, they could be bankers, and they could be suppliers, customers, regulators, analysts, and financial institutions, right? So these different type of users have a different agenda for utilizing the financial statements and the information available on that financial statements, and use different methods of analysis of the financial statements to reach to a conclusion, and their conclusion and their decision making differs from one another, right? Mainly the internal users use financial statements for planning, evaluating, and controlling companies' operations, and for this purpose they use different methods of analysis of the financial statements to reach to their purpose. And mostly external users, they use financial statements and analysis of the financial statements in order to evaluate or assess the past performance of a company, find out the current position of a company, and then predict the future performance of that company, right? So that's all about the users. And then we had discussion on pre-awareness, means we have to have the knowledge of financial accounting, financial reporting, financial statements, accounting cycle, accounting principles, and all different financial reports to be able to better analysts of the financial statements. We also had discussion on sources of the information which could be used to analyze and then reach to a conclusion. We can have the analysis information on audited annual reports, companies' websites, or we can take the information from these sources and then apply the tools and techniques of financial statements analysis, and then analyze the company's operations, right? It could be the sources could be audited annual reports, company websites, regulatory bodies, financial press, industrial bulletins, and so on and so forth. And there are various methods with the help of which we can analyze financial statements. So there are six. These six, each one is a separate financial analysis. Horizontal is a separate financial analysis, vertical is a different financial analysis, common size a different financial analysis, trend is a different financial analysis, ratio is a different financial analysis. So all of these six are different financial analysis, which combinedly are called the financial statements analysis, right? Now these six methods can be used in three different ways: to do internal analysis, and to do external analysis, and to do external comparison. And then we had discussion on internal, external, and comparison. We said that in internal analysis is when we compare the performance of a company over different years. That's called internal. And external is when we compare our performance with another company, another same company in the same industry. And the external comparison is the combination of internal analysis and external analysis, because in this analysis we first internally compare ourselves over a few years, and then we compare ourselves with another company, and then we compare ourselves with the industry. So that's why it's a combination of both of them. That was our previous lectures. Now inshallah today it's lecture 3, so let's talk about lecture 3. Lecture 3 is about the factors of business survival and problems with financial statements analysis. All right. First we'll discuss the business survival, factors of business survival. There are four key factors of business survival. What does it mean? It means with the help of finding out these four factors in a business, we can then decide that whether this business is going to survive or not. Or these four are the indicators of a business survival, right? These four things will indicate that whether a business is going to survive or not. Once we found out that business is surviving or not surviving, then we make further decisions, right? So the first one is profitability, the second one is solvency, the third one is stability, and the fourth one is liquidity. These terms have already been discussed in the first lecture, so here it's the detail. So let's talk about them one by one. Profitability is important if business is to generate revenue in excess of the expenses incurred in operating that business. We have to find out the profitability because it's very important. We need to know that whether a business is generating enough profit so it can cover all the expenses of the business, and also there is something remaining for the owner's pocket as well, right? So to find out this, we call this profitability, and it's very important to know. If a business is not profitable, we do not proceed with that business. We are not interested in carrying out in that business or investing in that business, right? Because after all, our main goal of investing and then running around all the day struggling is to get some profit at the end of the day. If there is no profit, then why we waste our money, we waste our funds, and also waste our time. Solvency of business is important because it looks at the ability of business in meeting its financial obligation, right? Every business has a financial obligation. That financial obligation could be short-term or long-term. Financial obligation means qarz, right? Credit. It could be long-term, it could be short-term. So with the help of solvency, we can know that what is the ability of a business or a company or a project to meet its financial obligations, to pay for the long-term debts and to pay for the short-term debts. All right. Again, looking at the profitability, solvency, stability, and liquidity, it's different from the user's point of view, right? For example, a shareholder may look profitability from different angle, solvency from different angle, stability from different angle, liquidity from different angle, but a customer may look at from different angle. So it totally depends on the users of the analysis, because after all, we do financial analysis to find out these four things, right? And it depends on the users, how they use it and how they look at them, right? Stability is the ability to withstand a temporary problem, such as a decrease in sales, lack of capital, or loss of a key employee or customer, analyzing your cash flow, and a variety of negative scenarios will help you determine whether or not your business is financially stable. Stability is also very important to be known, because in a business life, anything could happen. So we want to check that if something unusual happens to our business, whether we can stand or not. So for example, if you see nowadays, it has been like more than a month now that there is a lockdown, right, due to COVID-19. So now any business is if in these days could survive, we said that this business is stable, because nobody knew that this will happen. This is an unplanned and unusual situation that's coming on the businesses. So if in these 2 or 3 months, if any business could survive without any significant effect on their operations, we will say that this business is more stable. If these lockdowns had less effect, we will say we will accordingly then gauge the stability of. If there is no effect at all, we said this business is very stable. If we said there is a slight change, we say it's a stable. If there are drastic changes, like businesses lose all their employees, cannot pay for the salaries and wages, cannot pay for the expenses, and they have closed some of the branches of their businesses, then we can say that this business is not stable. So then we can decide accordingly whether to stay with this business or leave this business. So basically, stability is the ability of a business to handle tough situations in a very good way without having any significant or negative effect on it, right? So that's called stability. Liquidity is the ability of a business to pay for debts as they come due. In practical terms, liquidity means comparing liquid assets to current liabilities or financial obligations that come due within 1 year. So liquidity basically means that how much cash is available with us, anytime to meet our short-term obligations or to meet our short-term plans, right? So that's called liquidity. The more the organization is liquid, the more it's strong and the more it can survive, right? So if a business is strong in profitability, strong in stability and solvency and liquidity, we said that this business is very strong to survive. It can survive, and there are less chances for this business to collapse, right? And mostly we are willing to invest in such businesses. Okay, effective financial statements. How can we effectively analyze the financial statements? So here are some tools and techniques that we could use in order to effectively analyze the financial statements, right? Look, one is financial statements analysis and one is effective financial statements analysis. So the effective financial statement analysis is what we required, right? We have to effectively analyze the financial statements to get to the concrete results, right? So to perform an effective financial statement analysis, you need to be aware of the organization's business strategy, main goals and objectives. If you want to analyze the financial statements of Salam University, for example, you have to first understand the business strategy of the financials of the Salam University, and then the main goals and objectives of the Salam University. If you do not understand the business strategy of Salam University and the main goals and objectives of it, you cannot reach to a better conclusion after analyzing the financial statements, and you cannot provide better advice, right? Or you cannot get better results from the analysis or from those findings that you get from the analysis, right? That's why it's very important to know the business strategy of the company and also the main goals and main objectives. So these are the organizational factors. We call them the organizational factors. There are some other industrial factors as well, right? In organizational factors, business strategy, main goals and objectives comes, and we have to know them before analyzing the financial statements. Now there are some other factors which are called industrial factor. So that is, we have to understand the nature of the industry, right? We have to know the nature of the industry in which the organization is operating or working. We have to be aware of the industry nature, right? And we have to know the overall state of economy of the state, overall economy. We have to know the overall economy status. What is the overall economy? For example, overall economy is down, and a business is doing a little bit good, so that is better information. If overall economy is doing well and a business is not doing well, then there is a problem, right? So we have to be aware of the overall industry and overall economy, right? Before analyzing the financial statements and concluding the results and interpreting the results, and then and commenting on a company's survival with respect to profitability, with respect to solvency, liquidity and stability. Okay. Problems with financial statements analysis, like limitations of financial statements analysis. You know, everything has a good aspect and a bad aspect as well. What is the purpose of discussing the limitations of financial statements analysis? The purpose is that we don't have to rely totally on the results of the financial analysis, right? We don't have to totally rely on them, because there are some drawbacks of the financial analysis. Understood? If we totally rely on them and we just neglect the drawbacks of them, we could be misled, right? And we don't want to be misled. صحیح ده؟ کومه چرته مکمل financial statements analysis باندې امید ساتو او د دې چې کوم ډرابیک دی هغه موږ په ذهن کې نه نسو، ممکن دی چې غلط طرف ته لاړ شو. صحیح ده، financial statements analysis ډیر حد پورې موږ ته صحیح معلومات راکوي، خو په ضمن کې بعض مشکلات هم لري چې هغه مشکلات ته هم موږ باید فکر وکړو، او هر وخت که باز ما با اساس نتیجه financial statement analysis کدام فیصله را میگیریم، باید این چیزها را هم مد نظر بگیریم و بعد از او باز یک فیصله را بگیریم. صحیح است؟ خب اول drawbackش چی است؟ An analyst frequently compares the financial ratios of different companies in order to see how they match up against each other. However, each company may aggregate financial information differently, so that the results of the ratios are not really comparable. This can lead an analyst to draw an incorrect conclusion about the results of a company in comparison to its competitors. Now look at this. This is very, very important. اوس ضرور خو نه ده چې ټول کمپنیان یو قسم د فاینانشل رپورټینګ کوي، معنا دا چې اوورال فاینانشل رپورټینګ خو یو قسم ته دی، خو اوس چې موږ ایچ لاین آیټم ته ورځو، هر مثال یو مصرف زه اخلم، آفیس ایکسپنس زه اخلم، کېدای شي یو کمپنی په آفیس ایکسپنس کې 15 شپږ شیان شاملوي او بل کمپنی په آفیس ایکسپنس کې 8 شیان شاملوي. چې کوم کمپنی آفیس ایکسپنس کې 8 شیان شاملوي نو دغه آفیس ایکسپنس زیات دی، کوم کمپنی چې 15 شیان شاملوي دغه آفیس ایکسپنس کم دی. دیگه فلهذا ما گفته نمیتونیم که ولا کمپانی که آفیس ایکسپنس زیاد داره و ولا خوب پرفورمنس نداره، کمپانی که آفیس ایکسپنس کم داره و خوب پرفورمنس داره. نه، صحیح است؟ فلهذا این چیزا رو باید مد نظر ما بگیریم که بلایند کمپریزن ما باید نکنیم و این واقعیت ها را هم مد نظر ما بگیریم. صحیح است؟ خب comparability between periods. The company preparing the financial statements may have changed the accounts in which it stores financial information, so the results may differ from period to period. For example, an expense may appear in the cost of goods sold in one period and administrative expense in another period. هم یک امکان داره که ما یگان مصارف را تا بالا میکنیم، یک سال زیر یک نام را ما راپور دادیم، دیگه سال شاید که زیر دیگه نام ما راپور بدیم، دیگه سال زیر دیگه نام ما راپور بدیم. چون ارگانیزیشن تغییر میکنه، طبیعت جو تغییر میکنه، کامپلکس شده میره، کلان شده میره یا خرد شده میره، فلهذا این چیزا تغییرات پیدا میکنه. فلهذا ما باید این واقعیت هم به مد نظر بگیریم، یعنی بلایند فالو نکنیم امی نتایج تحلیل راپورای مالی را، بلکه این واقعیت را هم مد نظر ما بگیریم. صحیح است؟ Okay, operational information. Financial analyst only reviews a company's financial information, not its operational information. So you cannot see a variety of key indicators of future performance, such as the size of the order backlog or changes in warranty claims. This financial analysis only presents part of the total picture. Another problem with the limitation with the financial statements analysis is that when we do financial analysis, we do not take into account operational information of that company. We only focus on financial information, which is not good, right? So we have to be aware of the operational information as well before deciding and taking into account the results from the financial analysis. Financial statements analysis also ignores the price level, right? Some company may charge high prices and other company may charge low prices. So with the price change, there is change in the total sales as well. We must be careful with the financial statements because strong financial statements analysis does not necessarily mean that the organization has a strong financial future. मतलब دا دی چې موږ د سبایدونه کو کنه چې ست تحلیل د تحلیل چې کوم نتیجه موږ سره راغله ده فقط او فقط موږ په هغه باندې ټول خپل فیصله بیسو ګرځو او چې موږ وایو که چرته د فاینانشل انالیسس نه موږ سره ریزلټس سترونګ راغلي وي نو دا د خبرې دلالت ده چې دا کمپنی به سترونګ وي. نه، دا خبره پکې نشته. موږ باید دغه نور حقایق ته هم نظر وکړو او دا حقایق هم په خپل نظر کې ونیسو، د هغې نه وروسته بیا فیصله وکړو. صحیح ده؟ Financial statement analysis might look good, but there may be other factors that can cause an organization to collapse. صحیح است؟ صحیح است که تحلیل مالی ما نشان میده که این ارگانیزیشن بسیار سترونگ است، ولی اگر ما این چیزا را مد نظر نگیریم شاید تو کدام چیزی from operational aspect, from price change or from other for example aspect like we had period aspect or we said different items aspect. See, these aspects, if we ignore them, maybe in future the organization collapse, right? So then we can end up in making a wrong decision. If we only base our decisions on the results of the analysis of the financial statements, we could be misled. In order to avoid misleading, we have to keep in mind these limitations of the financial statement and keep into account or consider these important aspects as well, including industry factors, including organizational factors, including different reporting aspect, different period aspect, operational information aspect, price change level aspect. All these aspects should be kept into account, kept in mind, right? So this was our today's lecture. So I hope it was clear for you to understand, and I hope you learned things from it. And that's also the end of our chapter number 1. So in chapter number 1 we had 3 lectures which have been delivered to you in 3 different video lectures, with the hope that you guys studied well, watch these videos, refer to the lecture notes or slides, and then if you have any question, any doubt, come back to me with the questions. Also, don't forget to let us know your recommendations. If you have any objection or recommendation, any suggestion, please feel free to let us know. Right? We will be very happy to entertain all those. Right? So thank you so much. Bye now.